thought we'd have a look at a couple of stocks. Perpetual has lobbed a near $2.5 billion takeover offer for Pendal Group. The $6.20 a share deal would see Pendal shareholders own around 48% of the merged entity. Perpetual trading has been paused this morning. Pendal is soaring though, up more than 20% after the announcement. So what does the team think? We're still trying to connect with Howard at the moment. So Mark, what do you think of Pendal and Perpetual on this takeover?
Look, I think it's pretty opportunistic by Perpetual. Pendal had been beaten down a hell of a lot further than Perpetual has. I think Perpetual's only down about 7% in recent time, whereas Pendal's down sort of more around the 17%. That's reflected in the obviously the PE ratios. Perpetual's around about the sector average of 17. Whereas Pendal's sort of 8.
Right. Their
dividend yield's quite a lot higher as well. There'll be some cost savings there, probably more so from a back office point of view and admin. I dare say they'd still, given that funds management's still very relationship based in a lot of situations, they'll probably have to keep those sort of front office staff. But Perpetual has been buying up a few fund managers of late.
Right.
They bought a firm in the US recently, which the name eludes me at the moment, but yeah, look, the sector as a whole, not obviously, things like Magellan, etc. It's been a case of catching the falling knife quite often in this sector lately. It's not a sector I generally favour, but from Perpetual's standpoint, I think it's probably a fairly good purchase. I think it brings the funds under management to 200 billion, gives them a lot of economies of scale. Value investing, which Perpetual are fairly famous for, is probably going to be the theme of the next couple of years with rising interest rates. So I guess onboarding some more FUM, or a hell of a lot more FUM by the looks of things, isn't probably the worst move when something's discounted like this. So from Perpetual's point of view, not a bad move at all. It's still trading 20% below the takeover price, though. I noticed.
Right.
The 623, it's only, even though it's up 20% today, I think the takeover bid's 40% higher.
Right.
So
right.
It's a fairly, it's a fairly lofty bid. So,
yeah. So what do you think? Would you be interested in either Perpetual or Pendal at this stage?
Look, I think I had Pendal on the call last time I was on. And I was a bit of a no then.
Yeah.
It's more so the industry so much. But if you're this sort of investor that that likes to buy these managed fund companies, Perpetual, like I said, the market conditions should suit them over the next sort of 12 to 24 months at least.
Right.
And look, and it will bring in some economies of scale.
If you're in both, hang in there and see how it comes out.
Well, look, I think so. I think it will probably help both companies overall, just in terms of an economies of scale thing.
Right.
And you're going to get some, you're getting a much better price in your Pendal than you were on Friday at $4.50 or whatever it was. So I'd probably, just a hold for now.
Okay. So would you get out of Pendal at these?
It's still trading at a discount to the takeover price. So if you're happy to hold both, you would definitely hang on for the takeover price.
We're connected with Howard Coleman now. Howard, welcome. Good to see you. What did you think of the Perpetual takeover of Pendal, and what do you think of both companies?
Well, it certainly looks better for Perpetual than it does for Pendal, or at least for Pendal shareholders. When you look at it, Pendal's on a much lower PE, even if you take into account the funds outflow recently, than Perpetual. So Perpetual, it will be automatically earnings per share accretive. But, the problem with the industry at the moment is the time to buy into fund managers is when the market's low. When the market's high, and it's reasonably high at the moment, it's not a good time to buy into fund managers because their earnings probably can't go that much higher. And Pendal's earnings for the past year, their year ends in September. So it's a little bit out of date, but they had a fair bit of funds outflow after the end of the financial year. So the PE that we're looking at is probably inflated by earnings that won't be repeated because they got performance fees that they probably won't get again. Plus, with funds outflow, their funds under management is lower. So in terms of would I own either of the two of them, neither of them right now. This is not, in my view, the time to buy into fund managers. But Pendal has passed our filters in Teaminvest a number of times over the years, pretty consistently, whereas Perpetual hasn't. Right. They've both got reasonable return on equity and no debt, but their earnings aren't really growing much at all. So I'm not enthusiastic about either of them.